Good morning, welcome to CATEX TV. My name is Frank Fortunato. Today is Wednesday, February 6th, 2013. It was a pretty good-sized earthquake in the South Pacific earlier today. It was an 8.0, killed at least 5 people and set off a tsunami that was about 5 feet high. It struck about 5:30 or 3:50 p.m. Greenwich Mean Time earlier today near the Santa Cruz Islands in the Solomons. Australian and U.S. monitors said a tsunami wave measuring about 5 feet washed into the town of Lata on the main Santa Cruz Island. According to the UN Coordinator of Humanitarian Affairs, the wave appeared to have traveled about 500 meters inland, inundating the town's airstrip. Some more Sandy losses are coming in. Altera reported a loss of $115 million in the fourth quarter due to October Superstorm Sandy. Axis Capital recorded an estimated pre-tax net loss of about $331 million. This is related to Sandy as well. Its CEO, Albert Benchimol, said that a larger proportion of the industry loss from Sandy was for commercial business that would traditionally be associated with a hurricane event. That, of course, is the business interruption quotient that's beginning to be felt. British Petroleum can't seem to get away from this Macondo oil spill. The potential legal bill for the spill now has soared after the company disclosed another $34 billion of new claims brought against it by 4 southern U.S. states. The latest claims presented to BP last month mean that the total cost of the spill to the company could be close to $50 billion more than it had originally budgeted. BP is understood to have set aside only a few $billion at most to cover those southern state claims. At the CATEX event last Wednesday in Lloyd's, actually in our office across from Lloyd's, Tom Bolt made some news. It was picked up today by the insurance trade press. Some Lloyd's underwriters, Mr. Bolt said, do not use CAT models to their full potential. As a result, syndicates must invest in ensuring staff have a better understanding of their models and strengths and weaknesses. This was the stark assessment made by Tom Bolt, Director of Performance Management at Lloyd's, speaking at the CATEX reception in London last week. He said, "I often think that the people who use the models don't properly understand them." Bolt said he would have little time for syndicates that wanted to change models just because they were unhappy with the results. He said that he would not allow a syndicate to change which CAT model it used without first conducting substantial research into why that particular model was unsuitable. I would have a lot more time for them, he said, if they had interrogated the model and had their own data to challenge it. He said, you need to challenge your model, but how can you do that if you don't have the underlying data to challenge that model with? He said there are some positives, of course. He said many Lloyd's underwriters, in fact, are exceptionally good at using their experience and expertise to question whether a model is too liberal or too conservative. The Insurance Insider is reporting that the June 1 Florida hurricane renewal season has already begun, as reinsurers are bidding to secure participation on placements before submissions have even come into the market. Now, the situation is already leading buyers to predict, confidently apparently, a 10 to 15% decrease in the price of reinsurance. This is as the effect of Sandy begins to wane. Sellers are hoping that they're going to be able to counteract that decrease by offering improved terms and conditions. Of course, there hasn't been a hurricane of any size in Florida for quite some time, so that undoubtedly is having an effect on it. One place that there has been activity, of course, is in crop insurance. There have been a lot of losses there. When there are losses in a particular line of business, that means premiums go up and markets are attracted to the business. That's what's happening here. Last year saw record-breaking losses for the U.S. crop market on the back of a severe drought, but the resulting market improvements, translation, increased premium, are prompting insurers and reinsurers to step up plans to target the market. Albert Benchimol, again Axis Capital CEO, said the company's global crop build-out had been accelerated due to favorable market conditions. He said they're looking to extend its existing crop portfolio into a global book of business. Others have also signaled commitment to global crop growth, including Validus, which grew its crop book by $55 million at January 1 renewals. Their CEO, Ed Noonan, disclosed in a conference call earlier this week that they have decided to acquire a small company called Longhorn Re, which is a Bermuda reinsurer which underwrites a single crop contract. Markel International has confirmed that it's looking to enter agriculture business through its parent company's acquisition of Altera, which has a big crop business itself. Well, this is a little bit overdue. The Chinese government announced today that they're pledging to narrow the widening income gap between rich and poor, including raising the minimum wage and requiring state companies to turn over more profits to pay for social programs. They're going to raise the minimum wage by 40% above the current minimum of $730 a month. According to a widely used measure for income distribution, China ranks among the most unequal of societies. Back in September of 2012, there was a plane crash in Russia. That's hardly surprising. What's also hardly surprising is that the Russian Aviation Committee is reporting today that pilot error was to blame for the Antonov 28 crash, which is a turboprop that crashed out in the Kamchatka Peninsula, killed 10 people. The head of the Transportation Investigation Department said that the pilots violated landing procedures, gave flight traffic controllers false information on the flight itself, and had alcohol in their blood. Medical examiners announced that alcohol had been found in the pilot's blood. The blood alcohol level in one pilot was only low, while the blood alcohol level in the other pilot was categorized as that of a medium level of inebriation. The plane flew into a 1,500-foot mountain and crashed and killed 14 people on board. The Daily Mail is reporting something very interesting in England about a plane that veered off the runway at Rome's Leonardo da Vinci Airport on Saturday. The plane had belonged to a Romanian carrier called Carpat Air, but it was leased by the Italian national carrier Alitalia. It was painted in the Alitalia colors, green, red, and white. After the plane veered off the runway, injuring 6 people of the 50 passengers on board, before the plane was even removed from the tarmac where it came to its final resting place, Alitalia hired painters and had them go out and paint the plane completely white, completely erasing the colors and livery of the Alitalia logo. According to Alitalia, this is standard procedure in the industry to protect brand reputation. They said that we didn't own the plane, so as a result, we didn't want to be having the picture out there that in fact it was an Alitalia plane. Passengers on board the plane said that that's misleading because they thought they were flying on an Alitalia plane. They purchased a ticket at the Alitalia ticket counter. It was being flown by Alitalia staff. It was listed as an Alitalia flight. Apparently, because Alitalia leased the plane from the Romanians, they figured that it was all right to erase any traces of their identity from the crashed plane. Well, very interesting. That's the news for today. If we have any breaking news, we'll come back and tell you. Thank you for watching, and we'll see you tomorrow.